Excellent. So we get into the next session. So we have Shalini Gupta, who's the head of strategy at Sahamati, which is a not-for-profit industry alliance of participants in the account aggregator ecosystem. At Sahamati, she works closely with various stakeholders, including the policymakers, regulators, financial institutions, for enabling interventions, expanding the financial information types, leading growth advocacy efforts, and fostering innovative use cases. She leads also the strategic initiatives that seek to expand the adoption of account aggregators and promote digitization for achieving financial inclusion targets. She's also co-founded a leading digital loans marketplace and has more than 22 years of experience working as a BFSI strategy and risk expert with reputed firms such as ICRA Limited, ICRA, and McKinsey and Company. So welcome, Shalini, and this is a presentation. Thank you.
So good afternoon, everyone. It's a pleasure to be a part of a tech community, especially, this is a community where ideas come up and implementation strategies are also driven by tech today. So it's always a pleasure to interact with this community. What I'll present today, and I know it is after lunch, so I'll keep it short. What I'll present today is something which we've been hearing since the morning, that data is something, and data analytics driven products, processes is something which is what will define the next phase of growth in the insurance sector. And while we are talking about it, there is a silent data revolution that is already happening in the financial sector. And that's what I'll want to explain to all of you. We would want all of you to join hands with us in this journey and take it forward. So Sahamati, very short introduction. We are a Section 8 not-for-profit company. We are working as an industry alliance for the account aggregator framework. And we are just a group of passionate people who've come together who know that this framework has a lot of value, and we've just joined hands to grow it further. So this is a bottoms-up organization backed by the industry. And these are some numbers, and I won't get into the numbers because all of us know about it, but specifically, we as a market are sitting at a significant gap in terms of access to financial services, either be because of geography, be it because of, affordability, be it because of lack of understanding. Insurance, while the numbers look impressive, at an overall level, 4.2 versus 7.4 for the global average. If you deep digger, there are problems. The life insurance cover is just 25% of the population, and even in health, wherever there is a coverage, it is estimated that it's highly inadequate, and it may actually not meet the purpose for which someone took a health insurance. And what is account aggregator? So the problem we are trying to solve is, India as a country, we say that almost 80–90% of our population has a bank account and an internet connection. There has to be no reason why we do not have access to financial services. And our country has beautifully built up the India stack, which is addressing the various components of a digital journey. And these are modular blocks which are picked and plugged by financial institution to build a digital journey. And it's not digital. It could be a digital component in a physical journey as well. So we started with the identity layer, where Aadhaar brought in a reform saying that every individual has an electronic identity which can be verified electronically. Then we moved on to solving the payments layer with UPI, where payments have become completely interoperable. But where does the friction lie today? It is still the data layer which has to be strengthened further. And that's where account aggregator has been brought in to empower a customer with their own data. And I'll explain the framework quickly. I know most of you are aware of it, but I'll quickly take you through the framework. And using each of these modular blocks is what you're seeing a lot of innovation happening in the sector, be it in the form of, ONDC coming up with their credit services standards, and they're soon expected to come out with insurance standards. So that's all built upon the, the top 3 layers and modules available to them as a part of the India stack. So this is a diagram which just explains the account aggregator framework. So what are account aggregators? Account aggregators sitting in the middle are RBI regulated entities which have been mandated to work as a consent manager for the consumer and enterprises. So they have a fiduciary relationship with the customer. They are empowering the customer to A, give their consent digitally captured in an explicit form. So it's not the usual tick, terms and condition consent. It is a consent where, it will be declared what purpose it is being taken for, who is asking for the information, what period will the information is required, what will be the frequency of fetch. Everything is shown to the customer digitally, he accepts it. A copy of the consent goes to the financial information provider, and these are regulated financial institutions where the customer already has a financial account. So on an average, a person will have 2 bank accounts, maybe an insurance policy, a demat account. So all that comes on the financial information provider side. What do you have on the other side are also financial institutions, but they are potential financial services providers who are willing to offer you a product and service to meet your particular need. So today, if let's say anyone wants to apply for a term insurance and they need to present their bank, income assessment to the insurer, what they need to do is reach out to their banks and download their bank statements, give it to the insurance company, or do a net banking login, which is not very safe. So what account aggregator will do is on the tap of your consent, the data will flow directly from the FIPs via the account aggregators to the FIUs in a completely encrypted and secure form. The technical specifications has been laid down by Rebit, which is a 100% subsidiary of RBI, and the consent framework is based on Mighty Electronic Consent Framework. So everything has been taken care of, your data is portable and it is going with your explicit consent. You don't really need to do any paperwork now. What it does is, I would say it is not shifting the industry from unstructured data to structured data, it is shifting the industry from unstructured to gold data directly, because the data is flowing directly from the source institution on a real-time basis, digitally signed. Multi-account data can be made available via AA through a single pull. It is secure, it is consented, and with the DPDP Act coming in, we all understand the importance of having a consent record before sharing or accessing data. And a very powerful feature is a recurring consent, where you can request the consumer to share their data on an ongoing basis going forward. So that makes it really powerful in terms of, for lending, it is portfolio monitoring. For insurance company, it could actually mean how do you track renewals and how do you ensure, your renewal income goes up using that framework. When should you reach out to the customer? For what products? How is their profile changing? So all that becomes powerful via the AA framework. And it does away with the, the usual pitfalls with the existing data sharing mechanism, which is either printouts, PDFs, net banking, delays, data trust, data recency, all that is taken care of by the AA framework. So what was happening in the earlier style of functioning was that insurance as a sector, they also became very comfortable just catering to the low risk profile consumers, right? It's very easy to reach out to a salaried or high-income consumer. What about self-employed or low-income consumers who have a lot of digital trails available which they can present to you as their trust signals, as their demog, as their need. But the process is so cumbersome and so high cost that it doesn't become, it is not at all viable to reach out to that segment. And that's where the account aggregator is expected to lead to a lot of market expansion to high risk segments, which were earlier perceived to be high risk segments. This is a snapshot, so it's not an idea, it's not something which is proposed, it is already there and working well in the sector. More than 2 crore customers have already used account aggregator framework to share their data for different sources. Starting with lending, securities advisory has picked it up big time, and we are seeing a lot of advisors, the wealth managers and RIAs using it. And we are also seeing a small use cases picking up in the insurance sector. I'll also have a case study where we can show how it is impacting the insurance sector. 1.94 billion accounts, which is almost 60 to 70% of the total financial accounts in the financial sector, and this includes all 4 sectors, is now on account aggregator. So the coverage, the supply side is totally taken care of. If you talk about lending, which is the first use case, 7,500 crore of loans have been given using account aggregator. And the lenders have come back with fabulous feedback saying that the biggest impact is it is reducing my fraud risk to 0. And that's what we're expecting is something which holds true even for the insurance sector. And it's growing at a healthy monthly growth rate of 27% month on month. This is the account aggregator ecosystem. So this is unique because this is cross-sectoral, only data system which cuts across all 4 financial sectors. So there are 13 account aggregators with an operating license, another 4 with in-principle license. 115 financial institutions are sharing data via AA, and 217 financial institutions are using data via AA. And we call ourselves in our extended ecosystem, and Sahamati is working closely with all of them. We also include the technology service providers and fintechs, because we believe that everything that is coming up, the innovation on data is something, or even data audit, privacy standards, all that will be driven by the technology community. So we treat them as a part of our ecosystem, even though they're not regulated and formally not a part of the AA framework. These are some of the use cases, and I'll be very quick, but we can catch up later. I'll be happy to interact with all of you. So what is it doing? It is attacking all the sticky challenges which the insurance sector has today, which starts from saying that, how do you manage cost? So the framework is completely digital. It can be implemented even in phygital journey, assisted journeys. It's not as if you can, integrate it only in straight-through processing journeys. What it does is lower drop-offs, higher conversion rate, helps you move towards completely digitized journey. For the customer, it brings in seamless convenience. Risk assessment, I don't need to talk about it, because what you get from bank statement, which is the base document, is not just income, but also a lot of insights into the customer's lifestyle, his demogs, his spend. All that together, can that be used to offer digital products which are attuned to the risk of that customer? So I would say, why can't there be a green channel in which customers, and that's what lenders are also experimenting with, where anyone who has shared data via AA, they are, and if they are eligible, they are taken to lesser fraud checks and a quicker claim processing. So that is something which is, I want to leave that idea with the community. We need to think about models like that as we move forward. The third is around lower lapses. Like I said, given that you have a recurring feature available, you can just see, early signals and profile-based analytics. Who is more, given the profile of the customer, will he renew the policy or not? Because I understand insurance makes money only in renewals. So first year premium is just totally, equal to the cost. So how do you pick up profiles which have higher renewal potential? And then 0% flawed in application. So I was reading this interesting article where it said that out of 5,000 crore of profit which the general insurers made, 3,500 crore was fraud. So 10% of the premium income of insurance companies are going to fraud, and plus it is creating a lot of mistrust issues for the customers, because they don't really know when it comes to claims, will I get it quickly? Will I have to wait for 8 hours? Will I get 100% claim or not? But with insurance, if you're doing that fraud check at the time of onboarding with AA, and you're saying that I know this customer and he cannot be a fraud, he has a discipline available in his banking statement, there are no check bounces, or he's got a, he's subscribed to, let's say, a SIP and he's been paying it regularly, I'm willing to take a bet on this customer and I'll not trouble him at the time of claim processing. So that's something which we expect this to bring in. And obviously all this combined is expected to make it viable to reach out to segments which are very small ticket segments, which are perceived to be high risk segment, because what you've done is you've reduced the cost of processing the applications and the claim. So this is expected to lead to a significant market expansion for the insurance sector. And some people here and who've already heard about the framework, they start by saying that lending is the prominent use case for the account aggregator framework. But what we wanted to present with this slide is, if there are 6 big categories of use cases which we are seeing with account aggregators, starting from onboarding to risk assessment to advisory, PFM, bank account verification, and data analytics. And if you look at it after lending, it's actually insurance which is expected to have all these use cases. The only thing which we need to keep in mind is insurance as a sector. For lending, it was more of an operational efficiency improvement. For insurance, it would mean pivoting of various business models and the way we've been used to working previously. And that's what this slide presents. Another way of looking at it is, the bank, again, there are 15 financial information types that are available on AN, and again, insurance has a use case for most of them. So you would need bank statement, you wouldn't need mutual fund data. In fact, an insurance company came up to us and said that, we want to access mutual fund data, because if someone is paying their SIP, regularly, and they're a SIP customer, I can offer him an investment product from insurance. So, that kind of, while that's really cross-sell, but something which people are thinking about, at least in terms of profiling a customer. Insurance policy for deduping and ensuring that the customer is not over-insured, under-insured, and you're offering him the adequate insurance that is suitable for him. Tax return, GST is the first non-financial information which is now available on Account Aggregator framework, and GST is being used by a few insurance companies to assess the income profile of the self-employed segments, and so forth. And we're also expecting in the future DigiLocker, CBDT, we're working on it, telecom data, so a lot of other data which can give important trust signals to be on Account Aggregator framework as we move forward. So just 2 case studies, and then I'll end. So this is one case study. I picked up a lending case study because that's where the maximum usage has happened. The lender has reported 20% growth in disbursement. Fraud rates have become 0, and fraud rates in banking as high as what you see in insurance. Almost 20-25% of applications are marked as suspicious for any digital lender today. So that has become 0. And application is filled in less than 5 minutes and disbursed in 30 minutes. This is another use case for a large private sector bank, and the reason I picked up this case study was this is very unique in the sense, instead of integrating the AA module in a digital journey, what the lender has done is they have built a QR code scan-based journey. So when a customer walks in your branch, there is a QR code which is generated on the mobile of that customer. The customer can just scan the QR code. There is an account aggregator journey that will open on the customer's phone itself. He completes it in 3 or 4 steps, and the data is transferred to your backend system. So you don't really need to pivot the entire journey and say, I need to build an end-to-end digital journey. It can work well with your branch model as well. And that's something which can be really powerful for insurers who are working in the segment which still needs physical intervention. This is an insurance case study, one of the new age insurers. And they are doing some fabulous work in the self-employed segment, where they have seen a doubling of their self-employed segment profile, and low-income customers have grown by 7 times. And what they are doing uniquely is assessing risk at the time of onboarding using bank statements and saying that, if the customer has a good financial profile, I am willing to kind of offer a product which is suitable for his needs, a small ticket product. And they have now transitioned. So earlier they were using net banking and other channels, but they are now transitioning towards Account Aggregator for building up their products. Another question which people have is, what is in for me? So given that this framework is regulated, people tend to think that it is only for the financial institutions which are registered and regulated by one of the 4 FSRs. While that is true, I would see there are market opportunities for everyone, starting from small ticket digitally challenger insurance companies who are definitely going to build their business models using India stack and various components, including Account Aggregator. Incumbent insurance company will see a lot of operational efficiency game change. So why we don't see them adopting tech models so quickly as what we see in the challenger category, but there will be a lot of focus on operational efficiency and how to reduce cost and come up with newer processes and products. Then in insurance, unlike lending where, the distributor space is unregulated and they cannot use it, in insurance, InsurTechs, distributor InsurTechs are very well allowed to use a AA framework. So they are in. Then the data processing InsurTechs, and this is where the revolution will come in, because these are the entities, at the end of it, whatever is flowing through the AA framework is raw data. So you need institutions who can make a sense out of multi-source data flowing from different sources, be it insurance, and if we club it with health data and build up profiles and offers and risk assessment engines for the insurance companies. So they'll be the big, user of this framework, even though it will be at the back end and under outsourcing arrangements with the manufacturers and distributors. And lastly, the extended ecosystem for you, which is the InsurTechs, FinTechs, which are not regulated, but they're doing a lot of good work. For them, again, there is a mechanism, A, being a tech, intervention. You can, in the front end, still offer an account aggregator journey. The consent can be taken. The consumer can create a handle, give consent. The data will still be shared between the regulated entities, but you can provide that interface in your journey. So at the end of it, it becomes an opportunity for close partnership with your manufacturer and offering a seamless, well-stitched journey, right, to be able to offer that experience to the customer. So that's, so what we feel is that, all 5 categories are something which are, and it is really important for insurance companies to now pivot their business models and think about data in innovative, from different angles and how to bring about the difference. So that's it. Any questions? We don't have a FAQ round, but I am available here. We can chat. Yeah. Thank you.